business angel and founder of Sebastian Schick and Company, is talking to Patrick Grimes today. And Patrick is the CEO and founder of Invest on Main Street. And his company holds about $516 million of multifamily real estate investments. And everyone knows what investing on Wall Street means. But today we want to talk about what investing on Main Street is about and talk about the amazing success of Patrick, who really kicks ass with his portfolio management company. Welcome to the show, Patrick.
Well, Sebastian, I'm really happy to be here. Appreciate you having me. I was very intrigued when I learned about your show, and we've been talking about trying to connect for a little while now, and I'm glad we're finally able to do it.
Yes, it's a pleasure to have you here. I know your wife just gave birth to an amazing baby, so congratulations to this. And even more, a big thank you that you could spare some time today. I know how it is in the beginning. You hardly get any sleep and you probably live a lot on coffee and espresso. So really happy to have you around.
Well, I just finished my second espresso here in the espresso time zone. But yeah, absolutely. And I'm very excited. It's only been 3 days and we have our first bundle of joy in our life. And it's added a whole new dimension, which we're excited about moving forward.
Amazing time of the year, the amazing time of your life, and really enjoy this. So you founded Invest on Main Street, and we had a pre-call, of course, and I learned what Main Street is all about. Maybe you can share this with the audience. So what are you actually doing and why you call this Invest on Main Street?
Well, so I came from the typical grind in corporate America. I did machine design, automation, and robotics for many years. And I was fortunate to get some advice early on to invest in real estate as soon as you can and as early as you can. And although I was doing very fun projects with automation projects to develop manufacture of satellites, EV vehicles, rockets, medical devices. It was cognitively rewarding and exciting.
Sounds fun.
But it's a work and take. Yeah, it was. And I'm a nerd, and I haven't left that behind. I'm still a nerd today, but I do more profitable things that build a better future for my family. But the owner said, hey, you need to invest as much as you can, as early as you can in real estate and hedge your bets against just purely high-tech path. And so I that's what got me going down that. And I was fortunate to get that. What I realized is that most of the employers out there only train you up on their 401k. And that's all that there is. And maybe you graduate to an IRA, or maybe if you get real income earning, you've got yourself a financial planner. Well, unfortunately, all of those are geared around keeping you in their umbrella of a very few products that they make money on you investing. Yeah. And those products are invariably all correlated to the stock market and not inflation hedged. They're heavily taxed either front or back end. And they don't allow for that accelerated appreciation and tax advantaged that can make you retire early and grow through retirement. And so I started Invest on Main Street and didn't call my company Something Capital or Something Equity because I wanted to be part of the solution there. I wanted to try and draw people into a mindset and a way of thinking and try and offer various investments that give them non-correlated or recession-resilient options to not pay taxes and not have to worry about the stock market ebbs and flows every day.
Yeah, you mentioned this products. They're probably primarily designed, first of all, to generate income for the people who create this product, right? And who live off the fees and everything around it. And they don't give, especially in those times where we have quite a high inflation, possible recession coming up. I mean, most of these people who only invest in these products, I guess they have a challenging time ahead, don't they?
Yeah, they do. In fact, the picture is fairly bleak when it comes to the retirement of Americans. And the challenge is, even if they've been lucky enough to get to a point where they have enough to retire on, that is lessening by 8 or 9% a year now with inflation. Yeah. And that balance in those qualified plans is going to dwindle. They're going to have to pay taxes on the way out, and it's going to dwindle to nothing and not leave them the ability to pass anything to their heirs. And the reality is that if they get into hard, tangible assets like real estate or are energy portfolios, diversified energy funds and natural gas, oil drilling, or we have affordable housing and that are very low risk, diversified portfolios as well that cash flow well. If they get into any of these products, it allows them to take benefits over the direct ownership of real assets with hedge against inflation, and it grows with inflation. Their net worth grows over time. It also pushes off cash flow that grows over time. So it allows you to accelerate your journey to retirement and be completely on a different index than the stock market. So you don't have to worry so much, right? And when you retire, it allows you to increase your cash flow as you build your wealth and a legacy and leave something to your heirs, or go spend it all. But at the very least, you're not dwindling down and hoping you die before it runs out. And I think that that's something that a lot of people would really like to try, but they don't have the time to do it because they don't have they're high paid professionals. And like I was moonlighting it. In fact, I struggled. In fact, I didn't get married till a little later because it was so hard for me to manage my own real estate portfolio and do my demanding high tech job.
Yeah.
I was eventually able to pivot to real estate full time. And now I give people the same benefits to invest passively in these investments where they can go enjoy their family, friends, and hobbies.
I think this is what holds people off. I mean, they think if they invest in property, there's all this management, all this taking care of and having illegal assets. They don't know if they have a situation where they need cash. It's hard for them to get it out. So you offer them a fund basically, which they invest into, and you manage these assets. And what kind of assets you are investing in? I read something about multifamily investments. So what do you actually mean by multifamily investments?
Sure. So they're both multifamily and oil and gas, and as well as affordable housing, diversified single family, hundreds of affordable housing homes. And they give you different benefits essentially. But with so I started out by investing heavily in 2006 in residential pre-development, and I lost everything. And 8, 9, and 10 came through and they drug me over the coals, and I was personally guaranteed on the loans. And I learned that buying for cash flow is important. And I learned that buying recession-resilient assets where in markets and areas that fare well in recessions is important. And so then I started doing single family, buy existing properties that I could renovate, refinance out, and then do it again. And I'm essentially doing that same thing at a very large scale in 200 to 300 unit multifamily apartment. I call them communities because they're communities where people live. And we buy them distressed where owners have not taken care of them. We go in there, we fix them up. We make it a cleaner, safer, and improved living experience for the residents. Through the process, we raise the rents back up to market, buy it at a discount, renovate, improve the interiors and exteriors, raise it to market, have a better community for people to live in while we return monthly passive income. Once we get it lifted, we then refinance out, just like I did in a single family home, give the investors their capital back, and then they continue to cash flow with this. It's all tax advantage too, and inflation hedge. With the oil and gas investments, it's a non-correlated asset to real estate. I think if you look at the graduation scale, individuals are in the stock market, 401k, IRA, financial planner. The very next thing you do is you go to night school and you learn how to buy your own rental property. Well, I've got a bunch of articles in Forbes on why that is a very dangerous prospect. It's much more financially risky and legally, and liability. Your legal liability is huge. That's why these larger multifamilies as a passive investor are safer. But but maybe you've graduated and you've got a whole vertical of real estate and you're like, hey, I'm diversified. Well, but all those real estate, all the different types of real estate, large apartments, small apartments, single family, commercial, all those are still assisted living, Airbnb, all those are still one vertical, riding one interest rate, one valuation. And that is a correlated asset. So you're in maybe stock market. Now you're in real estate. That's one. But where else do you go? There's another 2008. When I saw the drop off, 2008, I didn't have non-correlated assets invested where completely different market cycles. And that's why I have oil and gas portfolios, because right now where interest rates are going up, cash flow is going down, and valuations are waning in real estate, we see the opposite. We see the macro political situation through Russia's natural gas drawn out of Europe and OPEC dialing back 2 million barrels a day. We see an incredible opportunity where valuations going up, cash flows going up in natural gas and oil. And so we do direct drilling through partners. We offer those investments. And right now, a lot of Warren Buffett just put $12 billion. Even Elon just put on his Twitter that he said we have to increase. It takes 800 barrels of oil to make a Tesla.
Yeah.
And 38% of the electricity in the United States is natural gas. We're doing 50-50 natural gas and oil diverse. And we do it in a greener way. But the reality is I would love for, and Elon knows, I would love for renewables to take a hold.
Yeah.
But if you look at the curves, it's going to be a generational change. It's not going to happen in the sunset of our fund, right? And so we do. And then there's the affordable housing, which gives you immediate cash flow, high cash flow, immediately to live on, right? And very low risk, government guaranteed rents and rental increases, diversified across states. And so I think there's different products for kind of help to diversify in different ways.
I guess there's a lot of education you have to do with your potential customers. Yeah. I mean, they're all primed to invest in standard products, 401k, etc. So how do you reach out to them? I mean, what is your strategy in getting this message out, which obviously you're creating lots of value and offering them really a very amazing alternative?
Yeah, it's interesting you say, because the reality is when you get to a size, we have over a 500 million portfolio in multifamily, and through our partners, we have a 200 million portfolio in oil and gas. And at this point, institutions will come and fill up all the equity. And we don't necessarily need to go to accredited investors, individuals with 200,000 in income or $1 million in net worth, and piece it out. But part of our journey and part of what's exciting is I've always been a community guy. I like building relationship. I like talking to investors. And so I literally want to raise the financial IQ of America. I'm out there. I write for Forbes. I've got dozens of articles out there. I've got articles on probably another dozen different mediums. I've got a book out. It did make an Amazon #1 bestseller. I partnered with some amazing people on that. And I'm getting out on podcasts like this, kind of share this message. And, quite honestly, my parents, they didn't have the opportunity to invest like I did. Yeah. And they bought an annuity, which means you're guaranteed to lose everything when you die, right? And you're just fixed income, not even keeping up with inflation. And I think that and the financial planner put him into that, right? Because he doesn't want to lose the money he's getting to put food on his family's table. Yeah. And his employer doesn't practice selling away. So that fiduciary responsibility keeps them in this one hit. You're going to work until you die and lose it all, right? And so I like to build that. I like to kind of share that and get the message on. I've talked on stages in Chicago on economics and Seattle on wealth building strategies. We've got a super summit. I go to investing events and speak to different accredited investors. I'm happy to set up a call with any of your investors. Investonmainstreet.com if they'd like to.
I think this is such an important topic. I mean, you see this everywhere in the industry that when you go to bank, and get consulted, primarily they sell you their own products, where they make proper fee. I mean, there's so much lack of financial education in the world, which is really hard to believe that no school is teaching any kind of financial education. People they start their first job, generate their first income, and then they are faced with these financial planners. I mean, it's everywhere the same in the world. In the end, they have no education in this aspect, and then they fall prey to these people selling them whatever they make the most revenue out of.
And they're not all bad guys. I've talked to a lot of financial planners, which are good guys. But their companies don't allow them to practice selling away. So they got a job to do, and they call it a fiduciary responsibility, but to only put them in approved. Well, that just means what their company says really at the end, and it doesn't mean that ours are not good. And the reality is financial planners have like a 6-week education to check that box. Wow. And so I'm coming with over 15 years of direct investment in alternative assets. And I have masters in engineering and business, but I have my elbows dirty and in the grind through these, and I've lost it all one time. I've structured portfolios to outlive recession resilience now, to be recession resilient and outlive another 2008, diversified into numerous assets. But I'm talking to a guy who's trying to keep financial planners is, very, very narrow and focused, and and it's okay, but they fear what they don't understand. And without that education, that's going to happen. Right. So I like to do what I can to get that message out.
Yeah, I think this is very important. 6 weeks. I mean, this is really blowing me off.
No, yeah. I mean, you can do it in less. To do like the series 6 or series 65 in order to be a financial planner.
Yeah. When I did my research, you wrote, as you said, a couple of articles for Forbes, and there's one which really caught my eye: 14 strategies for leveraging AI in your customer experience. I guess customer experience in the financial world, right? Yeah. So can you give me 3-4 strategies how AI can be of benefit in the financial customer experience?
Well, so I want to say first that we have real people you talk to, not robots.
Yeah.
And we value the relationship and the human connection. And that's actually a core value of ours. Yeah. And I'm constantly talking to our team that these are real people and we want to help these real people. They're not numbers and statistics. But on the back end, because I am an automations and systems guy, right? And I've done it for some of the largest companies that are most successful at it through, being an automation consultant and contractor, which is, I'm not doing it anymore, but I still love that. From our deal analysis side, we have to analyze hundreds and hundreds of deals in order to find those few diamond in the rough. And the reality is that all the ones that are openly marketed are typically that are well packaged and well put together and have all the information you need. Those are ones that you have large institutions that not looking for good deals, just looking to place capital REITs that have to put $1 billion to work. They're going to pay top dollar for it because they don't have the resources at the time. Yeah. But on our side, we've got to analyze these deals. And what's that secret sauce that allows us to do that? We have these brokers calling us, here's a property and a guy, and that's all I really know. Or here's like a tattered up, mismanaged property with a profit and loss statement. So we'll use tools like Reonomy and CoStar and some others, and we'll actually do scraping and number crunching to do a financial analysis in the areas to understand rental comparables. We'll look at their expenses to see if the taxes and insurance, the maintenance fees, we'll look at their expenses to see if they're representative of what's in the area. We'll look at their vacancies, their bad debt, not collected rent. We'll do all this stuff through statistical analysis to see, is there value to be gained here, right? Is this already at market? What's the gap from rent? What's the gap from just mismanagement? And then we'll look at the other properties around and see those ones that are at a higher rent. Well, what are their renovation states? How old are they? And are they representative in the amenities, right? And we'll see, well, what do we need to do to this property to get it higher? And so a lot of that we have systems and processes for. And not all of it's complete. You don't press a button, but there's numerous buttons that can be pressed to get next level data that then the human judgment can take a look at. But the number crunching on the back end and the analysis and the scraping of that information is something that would take many months to do. Now we can do it in a matter of a day or two through a couple sequential hits. And so that's some of the secret sauce between the multifamily stuff that we do on how to find those deals.
And I think, you have a lot of listeners from the tech industry. This is why I picked this topic, which is obviously of interest. And AI is adding so much value in different areas of our lives. And especially when you deal with lots of data. And as you said, with many deals to really get to the core essence, it's very helpful to use some tools and also to have an understanding what these tools can bring, not just rely on some fancy technology, also really understand what this technology is all about.
If you want to get really down the rabbit hole, some of the things that we're working on with partners right now is to use the 3D imaging, because there's very little databases which show you all of the properties out there. Yeah. And the diamonds in the rough are the ones that are not marketed and not well represented. And those are the ones where we find the best deals. And so one of the really interesting processes we're trying to prove out on the back end, secret sauce here is we're actually using some of that satellite imagery and then machine learning what apartment buildings look like from that, and trying to find ones that are outside of the radius of data points of ones that we know.
Mm-hmm.
So ones that aren't on rent.com, apartments.com, CoStar, MLS, all that, right? Because we want to find these ones that are mom and pops that have owned them for a while. And then we want to find ones that traditionally they're not renovated, they're living off of it, that it's kind of taking it out on the residents. They're not paying enough or at all, and in some cases, and we can come in and really make a big difference. And so that's one of the strategies. It probably from the techie side really gets me excited.
Yeah, I can understand with a background in mechanical engineering and an MBA and Master of Science in Engineering. This is certainly something which catches your eye.
Yeah, 100%.
You wrote a book about investment, and maybe you want to talk a bit about the book, which is you said a New York Times best-selling list.
Amazon, not quite yet.
Yeah.
New York Times, Amazon #1 bestseller. So,
but still, it's an achievement.
My next book maybe will be New York Times, but so because I tend to be that high tech analyst, I didn't actually do any stages or podcasts until about 1.5 years or 2 ago. I've been very much to keep my head to the grinding stone. Don't make a big deal out of it. Just get the work done. Yeah. And most of my investors have been people that have spent millions of dollars with me building one of a kind automated manufacturing equipment. Right. And so I brought them lower risk deals that brought them better, personal, better financial future for themselves. And so it was mostly word of mouth until about a couple of years ago. I decided, hey, look, I should spend some time getting my name out there. And I have an interesting story. I started snot-nosed engineer and was doing well, took my money, dumped it into real estate and high returning deals and lost it all, personally guaranteed, drug over the coals, barely escaped bankruptcy, foreclosure, had debt forgiveness negotiated, and then they had to pay taxes on that. And then I got back into high tech, did really well, started doing great projects with bonuses, needed somewhere to put it, went back into real estate, but in a better way, recession resilient, cash flowing, portfolio diversification. It started succeeding, but I was moonlighting it. I was trading my time for my family, friends, and hobbies to do it all myself. And then I realized once I met my wife and got married in Beijing and California, I was like, hey, I'm going to trade up. I'm going to build a company. I'm going to get partners and we're going to do this at scale. And that story allowed us to move to Hawaii, allowed us to get the freedom to enjoy time with my newborn son and more to come, and to spend the time to talk with you right now, right? And to get this word out there. And so we put all that in a book, and a couple partners got together. We all did chapters. So there's some really cool people in here, and this was such a fun project because there's Russell Gray, the real estate guys, Phil Collins, the lead guitarist at Def Leppard, and then some NFL, NBA coaches, players, entrepreneurs, artists, and me with hair. And so I did have hair.
You lost all your hair probably because sleepless nights in 3 days.
In 3 days, it fell out, right? Yeah, my 3-year-old son's got way more hair than I do right now. So persistence, pivots, and game changers, turning challenges into opportunities.
I love this.
Persistence and pivots and game changers, right? Turning challenges. And it resonated with me so much that I was like, I've got to join this project. And I just had such a great time with it. And you know what? I do give this away. I do believe in the content. There's a lot of great stories in here. I tell my whole story. It's like my tell-all for the first time, get my head out of the hobbit hole. It was a stretch for me to do that. But so investonmainstreet.com/book. investonmainstreet, all spelled out, .com/book.
We will put it in the show notes, the links.
Use promo code Sebastian and I'll ship you a free signed copy.
Awesome.
Happy to do it. Yeah. And it's a really fun read.
Thank you, Patrick. Yeah. I mean, I love these topics, turning challenges into opportunities. This is my whole life, as an entrepreneur. I mean, we are told by the news and everything that this is such a gloomy time and the world is going to end, and then so many people are getting depressed. But on the other hand, all these challenges are great opportunities, to create something, to create a new business, to provide value to our customers. And if you have the right mindset, like you, I mean, this is the best time, could be the best time of our lives. To take these challenges which are out there and create something. And I'm looking forward to read your book. I'm sure there are lots of great ideas and mindset hacks to really help people to identify these challenges. And all of my businesses are basically created out of a challenging situation, where I took the opportunity and turned it into something which creates value. So
absolutely.
Thanks for that. So what is on the horizon? How do you see the next couple of years evolving for your business? And of course, I mean, privately you have your newborn, which you to take care of, but especially now in these times of high inflation, how do you see your company growing?
Yeah, well, so to your point, with this period right now, what we see from the real estate side is that there's a lot of investors that are sitting on the sidelines because they're fearful. They're buying into the fear mongering, but Warren Buffett says when everybody is scared is the time to be greedy, right? And while I don't like the word greedy, what he's saying is it's the time to be calculated. And to let the fear go and make calculated choices. And like, for example, right now, we've got a deal on our website that's open for subscription and it's in Atlanta. And we've got it at $5 million discount, values we wouldn't have been able to get 4 years ago. And this guy was distressed. Why? Because we went through COVID and he was not a good manager. He had a lot of people not paying rent and he had a building burned down. And that was a challenge for him. It was an opportunity for us. And so we were able to pick this up. We closed on it quickly with our own capital to get a distressed buy, a very low basis. None of the units are unrenovated. We've got $600 to $800 per unit in rent bumps. Now those are great opportunities that come at a challenging time, but we're well positioned with partners to take those down and to turn those into great cash flow wins in a time that it's hard to get cash flow. We got an amazing cash flow. That you don't pay any taxes on because of our depreciation. And so we've got deals like that right now. And we've got oil and gas investments, which I believe, actually, I wrote the article in Forbes that said multifamily apartment, existing construction, workforce housing that we do in the growth markets. That's the best hedge against inflation. But I'm going to counter it. I'm going to counter myself right now and say that while that's the best hedge against inflation over the long run, diversifying into oil and gas and non-correlated investments, that's something you're interested in doing today. That is the best inflation hedge today in this season because of what we're seeing in the valuations waning in real estate. Although our deals will perform even if another 2008 happens again in real estate, but have upside, even better tax advantages in oil and gas. What people don't realize is if you invest in oil and gas directly through an operator, about 75% of your investment comes off your adjusted gross income, your normal, ordinary income in the first year. That's like getting a 30% return on your investment. It's insane. So oil and gas off the bat gives you incredible tax advantages and allows you to ride a curve that's actually rising and appreciating right now. So we have that open, and then we're launching soon to be a diversified affordable housing fund, which gives you 12.5% a year currently paid out cash flow. So it's immediately starts cash flowing. It's a great retirement vehicle for you. Very low risk, government guaranteed rents. So that's what we have going on right now. All of them core values: inflation hedged, recession resilient, tax advantaged, helping to build legacies and early and fruitful retirements for investors.
Wow. Hey, that sounds amazing. Lots of opportunities to invest and get diversified and not be dependent on a 401 or however they are called. Thank you so much, Patrick, for giving all this insight today. It was a pleasure also for me from Europe to learn more about American properties and 401 setups. Thanks a lot. We will put your contact details in the show notes, so investonmainstreet.com. I guess people can reach out also on LinkedIn to you, or what kind of...
Yeah. Well, I mean, if they want to have a chat, I'm in this business because I'm a relationship builder. You can go to investonmainstreet.com/contact and you can book a time.
Yeah.
If you're interested in investing or just learning about what the opportunities are like, happy to have a chat, understand your goals, and see if we're a good fit. My email is patrick@investonmainstreet.com if you want to reach out. I like to be accessible. So I'm happy to chat.
Great. Thank you very much for your time. Enjoy your newborn. Enjoy this precious time which you have at the moment, and all the best for your business and the future, Patrick.
Absolutely.